What's up, everyone? How's everyone doing in the chat? So, currently, I am looking at Bitcoin. Sorry, not Bitcoin, Dogecoin right now. Um, this looks really interesting. It had a pretty big, rough day yesterday. A new daily candlestick just opened. We can see Bitcoin fell from 36 cents to all the way down to 22 cents at one point, even touching somewhere around like 21 cents around that area, which is a pretty big drop for Dogecoin. And this drop honestly does remind me of Bitcoin's drop back in 2017, where Bitcoin, let me show you. So I do have a falling wedge drawn out just to see. But if I go on the 1 day chart for Bitcoin, I kind of go on the logarithmic scale to like better show you guys. This was Bitcoin's drop. I guess it's better if I don't go on the logarithmic thing. But okay, so yeah, this was Bitcoin's drop. Kind of formed like a wedge over here, and then it suddenly dropped 50%. To me, this looks really similar to Dogecoin. Maybe just a smaller scale, but it really looks similar. But and before I try the technical analysis Dogecoin. It's a meme coin. It probably won't follow technical analysis once Elon Musk posts like another tweet or like if someone posts something else. So I'm going to take the technical analysis part of Dogecoin really lightly. But I do want to acknowledge how similarly it looks like to Bitcoin back in 2017, where Bitcoin was forming this wedge, which is where Dogecoin was forming, what Dogecoin was forming. You can see that here's support right here. And then resistance is kind of messier, but you can kind of get the general picture. And then suddenly we just break out. So that's basically what I see on Dogecoin. It's really similar to Bitcoin. Bitcoin. I let me go on a larger time frame, maybe like the weekly. Yeah, there you go. On the weekly, if I go on the logarithmic scale, you can see that formed this wedge over here. It fell 50%. And then Bitcoin just traded sideways for like a couple of weeks, and then it just rocketed upwards. In Dogecoin's case, maybe it's gonna trade sideways for a couple of days, just a couple of days, and then it might go back up. And I think it might go up with Bitcoin's revival probably, because currently on Bitcoin, Bitcoin did have a violent move downwards today. You can see that on the daily candlestick. It moved from 35K all the way down to 31K, which is a 4K move, which is a lot for Bitcoin. We haven't had this red of a day since May 19th, which is significant. It's and the main news that of why Bitcoin is like going down was because of the China news about miners going out of China because China kicking them out. In my opinion, that's not it's not bad news. It might suck in the short term, but how I think about it is China's having less and less control as miners move to the U.S. and like other places that incentivize miners to go to. Like I know, I think in Florida, I think their miners are getting a tax break if they move there, and like other places. So as miners continue to move out of China, and they continue to China continues to lose control over them. We can see it's good for Bitcoin in the long term, and keep in mind the miners are gonna go, they're gonna they're gonna go back anyways. Like even though they're kicked out of China, this is only the short term, right? Once miners start relocating and they start going to an actual they go to like United States, Guatemala, or like El Salvador, those places, Bitcoin's gonna start going up. Bitcoin's hash rate's gonna start reviving. Technical analysis wise, Bitcoin was forming a broadening channel, broadening wedge, sorry, a descending broadening wedge, which is bullish. You can see I can roughly draw out the support line over here. Resistance line is kind of it's more clear. You can see that this is a kind of like a megaphone pattern. The lines are extending outwards, which means that it is a broadening wedge, and since it is descending, which means that this is bullish. So I am expecting to see Bitcoin jump back to around like 34, 35K in the near future. Currently, you know, it is also in the falling wedge. You can see over here, if I draw out some resistance over here, you can see that Bitcoin is trading in the falling wedge, which means that it does have more downside to go, and that, you know, that gives us a really good opportunity to, you know, dollar cost average our positions. Um, I would never. I mean, if you're losing in Bitcoin currently, uh, something else you can do to save money is to sell all your position immediately and then buy it right back, because cryptocurrency actually doesn't have a wash sale rule. What that basically mean is that for regular stocks, if you're losing in the stock and you sell it but you buy it back before a month has passed by, um, you know, IRS isn't going to actually count that as a tax break. But for cryptocurrencies, it's different. There's no wash sale rule attached to it. So if you're losing overall in your crypto position, even if you sell for a loss and you buy it right back immediately, even if a month hasn't passed, you can still write that loss off on your taxes. Even if you uh, gain profits afterwards, you can write that profit off, the taxes on the profit off with the loss that you sold for cryptocurrency. So that's just a suggestion. You know, if you can do it quick enough, I would do that. If you're losing in Bitcoin, I would sell right away, buy right back. That way you can write off the losses in your tax sheets. And yeah, that's basically it so far. I do see in the comments that someone wants to go over Facebook, so I'm going to do that right now. And guys, feel free to ask questions in the chat. Feel free to put tickers in. I am looking at the chat pretty frequently, so yeah, let's look at Facebook. Okay. So Facebook has been leading tech. You can see that it has been consolidating over here since the September crash all the way till March, which is, you know, a good half year. You can see the same stocks like Apple and Amazon doing the same thing. Facebook, in my opinion, does not look too pretty right now, and the reason for that is it is kind of forming like this like rounded top area. And keep in mind that Facebook is, you know, it goes along with the markets, and so far the markets are not looking so well. We on SPY we just bounced off the trend line resistance, the downtrend resistance, which means that you know, we're still in the downtrend. That goes along with Facebook. If I go in a smaller time frame for Facebook, let me see. I guess there's kind of like, that's interesting. I guess you can say that this is an inverse head and shoulders. If I go in like the 15-minute, you can say this is an inverse head and shoulder. Right, so this is the left shoulder, head, right shoulder. The neckline would be somewhere like around this price, around 332.86, so 332.9, that area. Looks like Facebook just bounced that off of that today. So I do see an inverse head and shoulders, which is bullish in the short term. In the long term, it does look like it has around the top, which is not pretty, but you know, this is Facebook. Facebook has never failed to surprise me. Even on the red day, Facebook can be green, so we just have to see. Alright, next question. Would you be able to do an analysis on PTRA? Okay, so PTRA. First of all, if it's a long-term hold, I would also look at fundamentals. I'm not really that familiar with this stock's fundamentals. So first of all, if you think this stock's fundamentals are really good, even with a short-term crash, you're going to be adding onto the dip. Right off the bat, I see that there is a giant gap, which looks like it actually hasn't been filled yet. Let me see here. So I'm going to draw a vertical line. So okay, so the gap is at $12.70 around that area. Has not been filled yet. I do see consolidation over here. You know, if I go in the weekly time frame, let's see. That's interesting. Looks like it kind of looks like a bear flag kind of on the weekly. I don't really see anything. Maybe potentially like a falling wedge here. I don't. If I go in the smaller time frame, maybe I see something. Let me see. Let me try to draw something. Okay, so this touches the body over here, which touches the body over here. Support. I have 1 point, 2 points, potentially 3 points. I'm not really liking this resistance over here. I don't know. It's pretty questionable. This is a pretty questionable falling wedge. I don't really see anything that interesting on it. But if you're holding it for the long term, you should be able to have confidence that this thing is going to go right back up. NM. Someone's telling me to chart NM. Okay. Looks like there's consolidation over here. Looks like the stock is really gappy. It's probably like super I do see consolidation, which means that it's preparing for a move up or down, depending on something. Looks like it holds the 200 EMA, which is good. Oh wait, this is on the 4 hour, but on the 1 day, looks like it holds the 50 EMA, or the 100 EMA, I'm sorry. And looks like it's struggling to go over the 50 EMA, so I don't really see anything. All I see, maybe some descending resistance over here. And then, so maybe like a giant symmetrical triangle, as I see, so around let's say June 28th, this is where movement's going to come. So symmetrical triangle is neutral, which means that it can break out in either direction. So you just have to wait and see which way it breaks out from, wait for confirmation, and play the direction there. Alright, Marvel. Ooh, okay. Alright, so it looks like Marvel actually double topped just today. Let's see here. This looks interesting. Yeah, looks like Marvel double topped up here. Somewhere around this price, around 55.27. Marvel did double top, which is bearish. We can probably see Marvel pulling back to around like the 9 EMA at the very least. So that is around 53.23. If I go in a smaller time frame, yeah, see like Marvel double topped intraday today, and it also double topped on the larger time frame, which is bearish. Marvel does have a gap to fill around 49, which I doubt it's gonna like fill right away, unless we actually have like a pretty big correction. But yeah, I do see Marvel holding on to the 9 and the 21. If in the case that the 9 and the 9 crosses downwards into the 21, that's when Marvel's going to be in a downtrend, and that means that, you know, it's probably not going to be breaking this resistance over here. As you can see, it did double top, which is not a good sign for Marvel. Shows that it doesn't have enough strength. You can see on TTM squeeze, it's really not showing strength, and you know, volume is not that high, which means that it makes sense that it did double top. You can see on the larger time frame, Marvel had relatively low volume today, so it wasn't really expected for it to break that resistance. But you can possibly, let me see. I might see like a rising wedge somewhere. Let me see. So I draw support over here. So it did bounce off support over here, right? Resistance is from around like this point over here, right? Touch this wick over here. It's pretty messy resistance. You can say this is kind of like a rising wedge. Resistance is kind of messy, but you get the point. I am going to see it pull back pretty soon. Someone says Apple. Okay, let's take a look at Apple. So Apple was interesting. I actually saw an ascending triangle today for Apple, but I didn't play it because I was outside. But if you look at Apple in the larger time frame, it has been consolidating since September, which looks kind of like Amazon, Netflix, Facebook before it broke out. Facebook is a pretty, you know, it's like a leader of the tech stocks. So if Facebook breaks out of the consolidation, I can expect Apple to do the same. But regardless, let's look at technicals for Apple. I'm on a weekly time frame because it has been consolidating a lot. You can see that there is resistance over here. Apple has just about approached resistance today. So either tomorrow Apple's going to go up and reject this resistance and go back down, or it's just going to go right back. It's going to go down without even testing it, because it technically is like already like there. It's like in that general region. You know, support. You can see that there's obvious support down here. So Apple is forming a symmetrical triangle, similarly to there was an which was Facebook, I think. There was another. Oh no, it was Dogecoin. It wasn't Dogecoin. It was some other stock I was talking about it earlier. I totally forgot. But symmetrical triangles are neutral, which means that it can break out in either direction. Depending on market sentiment, tomorrow I am expecting a choppy day with Powell speaking, which may bring Apple's price down. But keep in mind, Apple is heavily weighted in the Dow and S&P 500 and Nasdaq. So wherever Apple goes, that's where the market's going to go. Currently, Apple is at resistance, which is not a good sign for the market as a whole, and it's also not good for Apple. So we're just gonna have to see. Keep in mind, this is the weekly candlestick, so Apple can pull back, it can go back right back up. Looking at the daily candlesticks, same thing. Apple's just not there. It's not quite there at resistance. So we can either see another run upwards to around like 132.75. and then go right back down, or just immediately just go right back down, maybe even gapping down. So that's what I see on Apple. It's probably going to be trading sideways for a little bit longer until July 30th, maybe August 2nd. I have heard a lot of talks about correction happening near the end of summer, and that's perfectly near the end of Apple's symmetrical triangle. So chances are we can also have a correction with it. So that's what I see on Apple. Alright, next stock is Uber. Okay, let's take a look at Uber. I know it hasn't been doing really well lately. So on the larger time frame, you can see Uber formed a diamond pattern up here. I can quickly draw it out. Somewhere around like here. It's not the perfect diamond, but it's on a pretty large time frame, and all the points match, but you can see that there is a diamond pattern up here, which is a reversal pattern. Sure enough, we did crash from around 55 all the way down to 43, which is $12, which is a lot for a double-digit stock. But looking at Uber, it looks like it is trading sideways in a bit. It's trading within the channel. I'm plotting on support right here. Resistance, it's I don't know. Sorry, I just clicked the wrong symbol, but resistance is somewhere like here, I guess you can say. Maybe if I adjust it a little bit with the wicks, you can say resistance is generally around this region. Currently, Uber did fall all the way down to support today, did bounce. I can see Uber probably bouncing right back up tomorrow, maybe even gapping up similarly to this candlestick over here. In the longer term, we're just gonna have to see. Uber does have a pretty big gap around the 30s over here. It doesn't look like there's any bear gaps Uber needs to fill. Maybe I should go on a smaller time frame to see, but maybe there's like this tiny gap around 54, which is pretty minor. I think Uber's gonna be bouncing around this channel for a little bit longer, unless the markets decide to have a correction. That's when it's going to break out to the downside, or if there's like really good news about Uber, maybe like the employment thing, or like anything like that, it can break to the upside, because it has been consolidating since May 24th, which is a long time. And honestly, Uber can pull in AMD, because AMD has been consolidating like this for like a month or so before actually being explosive. So yeah, that's basically what I see for Uber. What time frame do I regularly use? So for swing trades, I usually use the 1 day, 4 hours, the 3 hours, and the 1 hour time frames. Sometimes 30 minutes, it depends. For day trades, I use the 30 minutes, the 15 minutes, 5 minutes, 3 minutes, and depending on what stock, I use the 1 minute. Sometimes like stocks like Uber, well, this is actually not that bad, but like see how candlesticks jump around. If I look at a stock like Space or Virgin Galactic, you can see what I mean. I can't really trade on the 1 minute, maybe not even the 3 minute. The 3 minutes somewhat better, but you can see that stocks, the candlesticks still jump around. So I would use the 5 minute too. Like over here, I see that Space is forming some kind of like consolidation point over here. So those are the time frames I use. Would it be possible to do an analysis on SPY, MACD line crossed RSI with was over 70, but SPY continued to rise? That is entirely possible. Indicators aren't always the most accurate things to like predict the top. I do have an example. So on the daily, this was around September. You can see that SPY's RSI was around 82, which is really high. You can see that SPY had a blow off top, which caused this violent move downwards. But before it moved down, SPY hit the RSI of 71 around August 21st, which is like a whole week earlier. SPY has been trading above RSI for a week before finally crashing with this blow off top. So it's entirely possible. Since September, the only times we went over the RSI of 70 was around April 16th, where we did kind of, I won't say this is a blow off top, but we did kind of, gap up a ton of times and have like a bunch of green candlesticks in a row. Currently, we are, we're in the middle because, we did have a huge sell-off on last week. And we haven't been really pumping that much, like that consistently. We've been experiencing a bunch of red days, unlike September, where like from July 29th all the way to September 1st there were only like 3 red days, which was crazy. Okay, Tesla. Let's look at Tesla. So I did draw something out earlier for Tesla. I did kind of see a rising wedge on Tesla, but let's go on the 4-hour chart. Maybe we can see more. But if you draw resistance points, which roughly translates to this, 1, 2, 3, 4, 5. 5 points are touching the resistance line, which makes it a reliable resistance. And then I have support, which is a tiny bit messier. You can see there's 1, 2, 3, 4, 5 possibly touching support. You can see that if I extend these lines outwards, it might be a stretch, but this is around July 1st, which still looks like a rising wedge. Maybe it might break out. Hopefully it does. I don't really like seeing Tesla crashing even more, since it is part of SPY. But Tesla does have more upside to go. It is forming a rising wedge unless it does break out, which I highly like. If it breaks out to like the upside, which I highly doubt, I will be bearish around Tesla around like the end of June, early July-ish area. And possibly that's when like more rate news is gonna come out. So, maybe CPI data is gonna be crap. In a shorter term, I do see another rising wedge. You can see over here, right? There's you can roughly kind of draw out resistance lines over here. 1, 2, 3. Support lines. It's as I said, a bit messier, but you can see the general picture. This one doesn't count because Tesla did reclaim it. You can see we limited to a wick over here. You can see that there's another set of rising wedges. The first time we had this rising wedge, Tesla did have 4 3-hour candlesticks that were red. So we just have to see. We have to see. And keep in mind, Powell is speaking tomorrow, so this can easily break out to the downside. We can gap down. Did I go over Uber? I did go over Uber. It is in consolidation mode. Basically, it's based on market sentiment and news. I see more downside for Uber currently with a giant gap, but do keep in mind that Uber is consolidating after going up, which means that this can also be a giant bull flag. Workhorse. All right. So currently for Workhorse, so after this Wall Street bet pump, Workhorse does look like it's consolidating. It is holding the 9 EMA, which means that it is still in an uptrend. If it holds, that's a different story, but currently it is in an uptrend right now. I can kind of see ascending support. So we have 3 points touching it, potentially 4 if we go back down tomorrow. And resistance, I do see descending resistance from this wick all the way down. So Workhorse is currently forming a symmetrical triangle. There are 2 scout wicks up here, which is convincing, but it shows us that it doesn't have enough strength to hold up here. Keep in mind that symmetrical triangles are neutral, which means that it can either break up or break down, depending on market sentiment and news and a lot of different factors. RSI is in the middle, which means that there's equally amount of chances for workhorse to break up or break down. There is a gap for workhorse from 1150 to 1240. So there's a $1 gap over here, which is a lot for a $12 stock or $14 stock. So it is possible that workhorse can do a gap fill, and especially with meme stocks dying out, like GameStop at $199, even AMC, kind of just being slower. I think it might break down, but meme stocks are meme stocks. They never fail to surprise me, and they can go up if they want to. Okay, let's see. Can I look at Airbnb? Okay, sure. Let's look at Airbnb real quick. I think I charted out Airbnb like a few days ago. Yep, I did. And look at that, Airbnb still followed by rising wedge. So I did chart this out a few days ago, and looks like Airbnb did play what I drew out. Currently, I do see it in a rising wedge. I might need to adjust support a little bit, but you get the idea. I do see a rising wedge on the daily, which means that once this does break out, it's going to be a pretty red week. It's going to be a pretty red week, maybe day. But Airbnb, after going down, it is consolidating with a rising wedge, which is bearish. I do see it breaking out around July 6th, July 7th, that area. And it can possibly double bottom over here if I just scroll enough and maybe disable volume bar so I can work with this better. There might be some support around $132. So I can see it dropping like $17. That's the, I don't want to say best case or worst case scenario. It's just a scenario, I guess. Best case scenario, it has one red day and then just ignores it. Worst case scenario, it makes new lows or maybe double bottom at like 121 or maybe like at 129. So it really depends. But I do see a bearish pattern. And keep in mind, this Airbnb did form this rounded top, so this can also be a inverse cup and handle. So I see two bearish patterns within one. So just keep an eye out for Airbnb around the first week of July. QQQ for this week. Okay. So there are a couple of catalysts for QQQ this week. I can't really say what's going to happen with QQQ this week because there are a bunch of catalysts. For example, Powell is speaking at 2 p.m. tomorrow, which means that the markets are going to get shaky. If he decides to introduce a new detail about interest rates, tech is going to be the first one that's going to take a crap. If I go in a larger time frame, maybe like weekly candlesticks, I do see a rising wedge on QQQ. You can see there's some support over here. So this shows that QQQ does have room to go all the way down to 326, which it can pull another correction. If I go in a smaller time frame, I did see a diamond pattern somewhere. So I do see a diamond pattern in QQQ. Depending on how that plays out, that's a different story. As I said, SPY did reject downtrend resistance. You can see QQQ also rejected resistance today. If I draw out support lines, or if I even take the body in this case of this candlestick, you can see that this is forming a diamond pattern. A diamond pattern is a bearish, it's a reversal pattern. Currently it's a diamond top, which is a bearish pattern. If it's a diamond bottom, that's a bullish pattern. This is on the hourly chart, so this is more reliable. You can say that QQQ is forming like a bull flag, but I think it's going to easily break down to around 342. So I do see a reversal pattern on QQQ, especially with market sentiment, especially with this bull trap we had today, especially the Dow, because the Dow actually dropped around 5% last week. So this type of green day is it's nothing new. It's expected. It's fully expected. I was expecting a pretty strong green day sometime this week, and it looks like we had it today. So I do see a possible reversal for QQQ. It looks like it bounced off the down gap, the bear gap today. We may make a last push to fill this gap, and then go right back down, or we may just like gap down and break out of this diamond pattern. So we're just gonna have to see. MSGN. All right, I have never heard of this stock before, so I am gonna have to see. Okay, Wow, okay. Right off the bat, I see a rising wedge over here. It's not the best stock to to chart because there are a bunch of gaps, but if I take the general candlesticks and kind of mess around with it, you can kind of see like a rising wedge over here, which is bearish. You can see that after going down in the downtrend, it forms this kind of flag area, this consolidation. It is a rising wedge. You can see that TTM squeeze is not showing a lot of momentum, so that means that it's going to be going right back down. And I can see this gapping down tomorrow, or if it doesn't gap down tomorrow, it's going to be going down tomorrow. So if you have puts in it, then you're going to be making money tomorrow. Can you explain what Powell's speaking on tomorrow? Powell is having a press conference, I think, and it's all about like the economy, inflation, interest rates, maybe CPI, lumber prices, all that stuff. If he says something out of the blue, expect SPY to dump. But if he says everything like that we expect, we can still expect SPY to dump. So I see more downside than upside for tomorrow's speech for Powell. I do see choppiness probably like an hour before when he holds the meeting. So we're just gonna have to see what he says. If he says anything surprising out of the blue, then that's what I'm expecting tomorrow. Can I explain consolidation? Consolidation is basically when a stock trades sideways. I can give you an example with AMD. So the other day, AMD, this is on the 30-minute. Let me go on the 1-day chart. Consolidations when things trade sideways. As I said for Uber, I saw consolidating. I was saying it looks similar to AMD because AMD did consolidate up. Even though it gapped down, it did have a move up. It's consolidations when a stock moves sideways, or maybe like they're angling up or down. In this case, AMD's is trading sideways, maybe angling a bit down, but it is consolidating. It's bouncing from one support to resistance to support to resistance in kind of a channel. That's basically what consolidating means. And whenever a stock consolidates, that means that there's going to be big movement ahead, either a move up or a move down, because consolidation is when buyers and sellers kind of, they kind of just generate more power while, they trade sideways. And then when one of them have more power, they break resistance or support, and then, break violently up or violently down. OZON. Ooh, okay. I do see a rising wedge here. So there's 1, 2, 3, 4, 5, 6. 6 points touching resistance, which makes it a reliable resistance. Support, this looks like beautiful support actually. So if I extend my lines, I can kind of see that this is breaking around, end of June, beginning of July, around like July 1st, July 2nd. That area, I see a rising wedge breakout, which is bearish. It's going to the downside. So I am expecting this to go down, especially, you can kind of say this qualifies as a cup and handle. I mean, it's really questionable, but I do see an obvious rising wedge in the daily. EBON. Okay, EBON's a minor stock, so as long as Bitcoin decides to go down, EBON's going down along with it. Yeah, it does not look so nice. I don't know if I can chart EBON because it is really gappy. Yeah, I don't really see anything with EBON. It's a pretty weak, pretty slow stock. It has been trading sideways for some time. I can't really say anything for EBON, but it does go in sync with Bitcoin because this is a miner. So as long as Bitcoin goes up, EBON's going to go up. Currently for Bitcoin, I do see a descending broadening wedge, which is bullish. So EBON can go along with that also. So we're just going to have to see, but currently EBON does not look so nice. It kind of just consolidated a little bit, maybe kind of try to go up and then just immediately gap down. So it does have a gap around $6, like a $1 gap here, which is large, but as long as Bitcoin does bad, EBON's gonna also do bad. Hold on 1 second, let me drink water real quick. I've been talking for like 40 minutes straight. Alright, ANPC. Is ANPC antelope or is that something else? ANPC. Okay, it's not antelope. Antelope is another miner, I think, but I've never seen this stock before. Looks like this is a stock that gaps up and gaps down a lot. I don't really see anything helpful to chart here. Yeah, I don't really see anything. It looks interesting. Maybe if I go on the weekly, I might see something, but alright, on the weekly, I kind of see like, if I chart out support, this is resistance. Maybe like a descending broadening wedge. Maybe we can see some reversal soon, but I don't really know. I'm not confident on where this is gonna go. Are you expecting a drop in SPY or a correction soon? I am expecting a drop on SPY soon. Depending on if it's a correction, that is debatable. You know, SPY, ever since the March low, it kind of looks like a rising wedge on the weekly. But if we go on a smaller time frame, on the hourly, and I plot out, you know, support and resistance, you can see that for resistance, we just bounced off of that today around here. As I said, I was fully expecting SPY to go up today because we were at support. Support's not as clean, but you get the point. So we didn't fully fill the gap here, and I don't expect to fill the gap tomorrow unless, you know, Powell says something really nice. We did bounce off resistance over here. This is a descending broadening wedge, which is bullish. And last time SPY broke out of this descending broadening wedge, we did form all-time highs. I think it's somewhere around, let me see. I think it was around this area. It was around February, which felt like ages ago actually. So you can see that there's support over here. It wasn't as steep of a broadening wedge, but it was still the same pattern. You can see resistance over here. You know, we made this violent drop here. We bounced right back up. We had a violent drop. We bounced right back up. Violent drop, right back up. Maybe like a smaller drop, and then we just broke through resistance and formed the all-time highs. I can see the same thing happening for this time. I can see that we, you know, bounce up, which we did today. Possibly go right back down. Maybe if we're lucky, forming like a double bottom here. If we're unlucky, maybe going all the way down to 413. And then, you know, bouncing right back up maybe to 419, possibly breaking out, depending on how bad news is. So keep in mind, on the larger time frame, this is a bullish pattern. So if you want to buy SPY leaps when we're down here, go for it. I'm still confident that SPY is going to be good in like the next few months, maybe next month maybe. But currently in a shorter time frame, SPY does not really does not look good, and especially with the diamond pattern in QQQ, it gives me more of a reason to think SPY is going to go down. Amazon. Alright, so I have no idea what I drew here. Okay. So for Amazon, as I said, it's been trading sideways ever since September. You know, it's been kind of going up and down, up and down. We have kind of double topped here for Amazon. If I go in the weekly time frame, you can see that Amazon has been consolidating with like a with consistent resistance somewhere around like 3.5K, around that area. Support's also been consistent. I guess we have been you know, we had it setting support and then we drop. So currently we are at channel resistance. It looks like Amazon doesn't want to go past 3.5K. So if that happens and if the markets continue to go down, then we can see Amazon dropping, you know, maybe to the 9 EMA on the weekly, which is around 3.38K. Sorry, 3,338. I can't say numbers today. If we go to a smaller time frame for Amazon, you can possibly say that, you know, this is just a bull flag. Maybe like a descending broadening wedge, maybe. So possibly we can, we can possibly, this can qualify as a cup and handle. In my opinion, this handle needs to be a lot larger, which means there's a lot more downside. But if this is a valid cup and handle and markets aren't like doing too bad, Amazon can easily break to all-time highs, which is possible. Facebook has already done it. Apple looks like it's ready to do it. Maybe if it doesn't play the rising wedge. So Nvidia has already broken out of its sideways pattern. So we just have to see. BFLYs. I think that's butterfly. Yep, butterfly. Okay. Wow. Okay. First of all, this massive gap over here, which looks like it doesn't want to get filled. So what happened? What the? Okay. So if I go in the larger time frame, I don't really know where's the gap. I don't see the gap, but that's interesting. But I do see an inverse head and shoulders over here, which is bullish. Left shoulder, head, right shoulder. It looks like it tried breaking out today, but went right back down below the neckline, which is resistance. So that shows that it does not have enough strength to break it. It needs to hold above $15. So in order for me to be confident that this is a inverse head and shoulders breakout, what I'm going to do is I'm going to wait for BFLY to actually break $15, close above it, and the next candlestick to maybe retest but hold above 15. That's when I'm actually going to be confident to buy a call in this stock, because this stock does look really volatile. It goes from 15 all the way up to 8 in like a matter of like a week, and then goes right back up to like 14. So in order for me to be confident to play the stock, I will need confirmation. In fact, I will need confirmation for every single stock I play. So yeah, so basically just wait for confirmation. This is a bullish pattern, but keep in mind of the market, keep in mind of all other factors such as RSI. It is kind of like, getting overbought. TTM squeeze, even volume. If you look at volume has actually been doing pretty well. So I can actually see this breaking with high volume. So all right, let me take a look through chat. Let's see here. BFL, has anyone done Nvidia? I have done Tesla. Tesla, I see a rising wedge. Let me look at Nvidia. I didn't really do Nvidia yet. All I know is that Nvidia is probably it's doing what Tesla done in September, where it rallied based on stock split. I can see Nvidia pulling the same Tesla crash in September once the markets do correct. The split is happening around July 20th, so after July 20th, I can see the stock pulling back. Currently for Nvidia, I guess I can kind of see like a rising wedge if I plot out support, which is super messy, kind of like this. And then resistance. This is really messy. Yeah, resistance is pretty messy. I'm not really confident about resistance for Nvidia. I would say this would be kind of roughly what I would call it resistance. Maybe if I go in a smaller time frame, it might be easier. It's not, so. Or maybe this can be the rising wedge. Anyways, whatever resistance it has, I do expect Nvidia to take a pullback after splits, or maybe potentially before splits, because this really does look like Tesla back in September of last year. So what I mean by that is, if I go on a one-day chart for Tesla, so back in around like August, this is when Tesla announced that it was going to split. It ran from 280 all the way up to 504. So back then that was like from like 1.3K all the way to like $800 all the way to like 1 point something K. I don't know. It was pre-split. It shot up all the way to $500, and then it had this violent September crash along with market correction. I can see Nvidia doing the same thing. Currently, Nvidia kind of looks like it's in this phase right here where like it kind of gapped up and then gapped right back down. I do see more upside for Nvidia as long as the hype continues. but I do see a violent crash coming. Maybe not crash, but a pretty big pullback, similar to like Home Depot's pullback. DraftKings. Okay. What I know about DraftKings is that it got Hindenburged, which means that I think the Hindenburg released a short report on DraftKings. It did not really react to that very well, so DraftKings was rebounding, and suddenly it got Hindenburged, kind of gapped down from $50 all the way to 44, which is around like roughly like 10%. Currently, I do see DraftKings consolidating. Um, I do see that it might go down. Typically, whenever something like it kind of temporarily goes back up and then consolidates like this, it's probably looking for more movement downwards. Also, you have to take in account of the market. If the market's doing bad, DraftKings is going to do bad. DraftKings is especially weak, especially with the growth stock, tumble in March, I mean. So if you're asking me to play calls or puts on DraftKings, I would, that's interesting. I will wait for confirmation. It is currently in consolidation. Depending on which way it breaks out, that's the direction I'm going to be playing in. You can see for consolidation, it kind of has descending resistance. And for support, it's kind of also descending. So it's in a channel right now. If I see DraftKings, close above this resistance and, holds above it with the next candlestick, that's going to be calls. So calls above like $49, maybe $50. Puts under like, $46. So that's what I see about DraftKings. But DraftKings is still looking for a direction to go, so I won't play any options on it so far. IWM. Alright, so that's IWM is basically also, it's the Russell 2000. So this is small cap stocks. Small caps have been pretty, they've tumbled a lot for the past, few weeks. I do see small caps did gap up a lot today. It did reject resistance over here. You can argue this is kind of like an inverse head and shoulders kind of pattern over here. Looks really messy. If this is, I do see IWM testing around 224. I kind of doubt that this is going to play out as an inverse head and shoulders due to the amount of gaps it has and the gap down here, plus market sentiment. You can also see that this is a big rounded top, and this could very well be the handle of this inverse cup and handle. So yeah, currently it is consolidating. It can either break down, which I think it will, or it can, test this neckline over here as a so-called inverse head and shoulders and possibly break up. But currently with the market's condition, I doubt it's going to do that. Alright, Torchlight. Okay, let's take a look at that. Wow, okay. Right off the bat, I see a rising wedge on the 30-minute. 1, 2, 3. So this rising wedge looks like it's going to break out around tomorrow, around 10 a.m. So I can actually see this gapping down actually overnight, possibly filling this gap over here. Yeah, I see this gapping down. If it hasn't already gapped down, I can see this gapping down. Or if it doesn't gap down, it's going to be going down around 10 a.m. tomorrow, 9 a.m. to 10 a.m. I can see this going down, possibly bouncing off the gap around $8. If it's having a really bad day, I see this filling this gap all the way down to $6.30, 40 cents, that area. So that's what I see on Torchlight. Let me look at Micron technology. Ooh, okay. It looks like, so Micron after this looks a lot like Intel with the drop. We do have this giant bear gap over here, which looks like we're gonna fill. I do kind of see a diamond pattern down here. It's not the best looking diamond pattern. In fact, I don't even. Yeah, actually no. This doesn't really look like a diamond pattern. It more looks like a Let's see. Possibly an ascending triangle. Yeah, I'd say this is an ascending triangle. Maybe if I go in a smaller time frame, it might look like something else. Possibly inverse head and shoulders. It looks like Micron did find a bottom for now. I did look at flow for a Micron, and it looked pretty bullish to me. So we can either see it breaking, $78 tomorrow, or if it disappoints us, which the stock market never fails to disappoint me, we can see this going back down and try to form a new pattern. So yeah, that's basically what I see on MU. Baba. All right. For Baba, it looks similar to Uber kind of thing. I am on the 15 minutes, so maybe if I go on a larger time. Okay, on a larger time frame, it looks even worse. It looks like Baba. I don't know. I see a descending broadening wedge, which is bullish. This is bullish, though it does have more downside. Baba can still go all the way down to 204, maybe double bottom over here, and then break out. Or it can, continue to go up and break resistance and possibly bouncing off of 223. Yeah, but on the larger picture, on the 4 hour, I do see Baba bullish. In a short time frame, like in the short term, I can see Baba possibly double bottom around here. It does kind of look like Uber. It looks like this consolidation isn't really holding. Might go back down depending on China, the China news, China markets, and everything. All those events combined. That's where I see Baba, probably reversing. Okay. So, it is currently 9 o'clock. I've almost been talking for a full hour. I am going to have another live Q&A somewhere, possibly tomorrow, maybe Wednesday. I might change the time depending on my availability. If you guys have more questions, you can always Discord DM me. I'm at exclamation point J3RRY. I might be in some servers that you guys are in. Feel free to DM me. If you guys need a one-on-one, you guys can always DM me for that. I do one-on-ones when I have time. As always, make sure to subscribe to this channel because I am going to be posting more watch lists during the summer when I have more time. And if you guys want me to do another Q&A like this, please like this video. It shows support. And yeah, if you guys have any other questions, you can always DM me. If you want me to chart out something or if you want to show me a chart that you charted out, I will always provide feedback for you. So,